Hello, 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 everyone, and welcome back to Sipping Wealth Live, where I bring you news, tips, and tricks on how to wealth up. So, um, we're starting a little tardy tonight, but thank you all for joining me for this episode. Tonight, I'm going to go over the impact of life changes on your taxes. A lot of the time, people negate telling their tax accountants, the tax professionals, different things that happen throughout the year, and they miss out on a lot of different deductions when doing so. So I want to make sure that you are previewed to everything that may be impacting your taxes, and that you make sure that you let your tax accountant or tax preparer know. So, for those of you that are tuned in with me, go ahead and drop a hey or something in the comment section. Say, hey, girl, something so I know that y'all are tuned in with me. And go ahead and hit the share button. And don't forget to subscribe to the YouTube channel, Sipping Wealth. Um, yes, and then turn on that notification bell so you don't miss out on any episodes. All right, y'all. So let's go ahead and get into this topic. So, for starters, I want to go ahead and start with that W 4 form. So, for that W 4 form at the beginning of the year, you do want to make sure that you are filling this out. It is very crucial that you're filling it out properly because a lot of people are coming and they're like, oh, shoot, why am I getting hit with this huge tax bill? And my employer didn't take out enough taxes, or what exactly is going on? Well, if you the W-4 form did change a little bit. So you do want to make sure that you're updating, you're actually taking a look and not just defaulting whatever happened last year, but you're taking a look at that W-4 form and putting those zeros where they need to be. Or if you're filing single, or if you're filing married, but there's a lot of maybe your spouse or somebody else with both your incomes combined is going to be a lot more. Maybe you want to do zero instead of doing a filing an exemption for your child or spouse. So making sure that you go ahead and set those exemptions properly on the W-4 form when you file that at the beginning of the year. Very crucial. It's People are really getting hit with that change in taxes. Also, when it comes to the withholding, how the taxes are withheld are they're based they're a lot of the times when you're filling out the W-4 form, you're not telling the other employer, or I have another source of income. So if you don't tell the employer you have another source of income, they're only basing that withholding on that particular income. So for example, I had a client and she made 80 let's say 85,000 from one employer, right? So that employer is going to take out, enough taxes for that particular income. But when she tack on the money from the other employer, now that was an additional $90,000. Hey, hello, hello. Hey, y'all. So, um, that's that money was an additional $90,000. So what ends up happening is now filing single, now instead of being at just that 22 percentile tax bracket, it's actually at the 24% tax bracket. So now they're not taking out enough income taxes, and at the end of the year when you go to file your taxes, you're looking at a tax bill. So you do want to make sure you're setting that withholding, or you're prepping yourself for an additional tax bill if you do have large income sources from income from different sources. All right, the next thing is marriage or divorce. So, how marriage or divorce works, if you are married on December 30th or December 31st, if you have your wedding, you sign on the dotted line, you are officially ordained and married on December 31st. It is as if you were married the entire year. So yes, you will follow with your spouse. So for those of you that got married in December or really close to the end of the year or on the 31st, then you are considered married for the entire year. Okay, and you file jointly or married filing separately. Now, hopefully, you're not already having to file separately at this top of the year, but hey. The other thing is divorce. So if you file for a divorce and the divorce gets settled on December 31st or December 30th, whichever, it is as if you were divorced the entire year. So yes, you will go back to your original filing status of head of household if you have children or dependents, or you will go to single if you don't have any dependents. So you do want to make sure that, hey, depending on what your marital status is at the end of the year, December 31st, that's the status you're going to use for the entire year. All right. And the next thing I want to cover is having a child or adopting a child, or even the death of, someone on the tax return. So if the child is born before December 31st, once again, it is as if the child was alive for the entire year. You will file with the child. So those that have a close due date at the end of the year, I know you're hoping and praying that the child, makes it in that current year. But, if that child was born by December 31st, then it counts for that particular year. Okay. Also death, if anyone passes away or dies, then you can still file with them in that year. And then the following years, you're either filing as a qualifying spouse, the qualifying surviving spouse, or you're filing as single, or maybe you got remarried, you're filing with your new spouse. So that's what happens if there's a death. All right, the other thing is purchasing a house. So for my homeowners, so a lot of times my homeowners, if you don't have like rental income, things like that, you don't get to take advantage of that property tax or mortgage interest deduction, because it's not above the itemized deduction amount. But sometimes it is. So you do want to make sure that you are getting that 1098 form from your mortgage company, because, adding that, and maybe you have charitable contributions, qualifying medical and dental expenses, things like that, that can help you then be able to itemize your tax return versus taking the standard deduction. Okay. The next thing I'm going to go over is changing jobs or unemployment. So for those of you that received unemployment compensation, you do want to make sure you get that 1099-G form. You can go onto the unemployment portal. I know they have kind of like a portal system. You could go on there, or you can wait for that form to be mailed to you. But you do want to make sure that it is on your tax return, because it can hold up your tax return. Another thing is you're changing jobs. Maybe you change jobs a few times throughout the year. You want to make sure that you wait on those W-2s from each employer and you put that on your tax return, because things like this can hold up your taxes. It can delay your tax return, or even cause you to receive that letter in the mail from the IRS saying, hey, you owe us this amount of money. And you're like, what? I owe you how much? 50 grand? No, I had withholding. So you do want to make sure that you go ahead and add all your W-2 income on the tax return. Okay. Starting a business. So for those of you that started a business, as soon as you generate income, as soon as you make that one sale, you're in business for the year. So if you sell lotions, or you do a particular service, take photos, and you had one client, as soon as you get that one client, you're in business. You can go ahead and put that income on your tax return and take advantage of any tax deductions or any business expenses associated with that. So, and it could help bring down your self-employment tax and even your taxable income in general. So making sure that you're taking advantage of that. So if you started a business, like I said, you generated that one sale, you're in business for the year, you can go ahead and start taking advantage of those deductions. Or even those of you that were starting up a business and you have startup costs, and you didn't generate your first sale yet, but you generated that first sale in this year, you can go ahead and deduct some of those startup costs in this year that you had in previous years that you didn't get to take advantage of. And then you can go ahead and depreciate the rest, whichever amount that you're not able to take advantage of in this year. So there is a limitation as far as how much you can deduct of startup costs and the year you start generating sales, but you can depreciate the rest. So you don't have to just say, oh man, all that money I spent on my business before I started making money, it just goes to waste. I can't take advantage of the deduction. Yes, you can. All right, next thing is retirement contributions. Y'all, like I said in my last lives, it is not too late to contribute to your retirement for last year. So you have until April to make sure that you retirement max out your 401k. Better that you pay your future self than you send in this bill to the IRS. Is it dollar for dollar? No, but is it going to make a difference? Sure, yes. So contribute to your retirement, max out your retirement, that 6,500 amount, or depending on your business entity structure, well, yeah, you may be able to take out more. I mean, you can go ahead and contribute more. But yes, make sure that you're and making sure that you're also bringing that up to your tax preparer, your contributions into your retirement. The next is receiving an inheritance. So this is huge because you can either get hit with estate taxes. There are tax implications to inheritances. Okay, so if you inherited an asset, there is a lot of the times, most of the times, a tax implication. So you do want to make sure that you are bringing that to the forefront. Okay, educational expenses. So whether you maybe take a class at a local community college or you're in a course, things like that, you can go ahead and take if you're not in a 4-year university and you're doing their first 4 years for that American Opportunity Credit, you can still do the lifetime learning credit. So, and that's a credit that you can take advantage of, for the rest of your life, as long as you are investing in courses and education at a qualifying institution. And that actually falls in guidelines with the lifetime learning credit. And it could be supplies and things like that too for the course or the class. Moving for a job. So if you had to relocate for a particular job, military workers, government workers, things like that, make sure that your tax professional know about this. Energy savings improvement. If you do renovations in your home and you made sure that it was Energy Star approved and you made sure that it was energy efficient, you want to take advantage of those energy savings home improvement, those tax credits. They also are talking about increasing those, but you do want to make sure you are taking advantage. These are credits, okay, that will decrease your tax bill dollar for dollar. Selling a property. So if you just like when you purchase a property, if you sold a property, you do want to make sure you bring it up because you can have capital gains implications as well. So you do want to make sure that you're bringing that up so that you don't receive a letter saying, oh, you sold a property and you're getting hit with capital gains tax and penalties and interest because you didn't put it on the tax return. So make sure if you're selling an investment property or your main home, there are certain limits. There's a exclusion, a primary resident exclusion, tax exclusion. But for those that have investment properties, things like that, you want to get in front of those capital gains. And if you do plan on selling a property, sit down with a tax accountant beforehand and see what the tax implications are of doing so. The next thing is debt forgiveness. Debt forgiveness is income is considered income. So you will end up receiving a 1099-C, and that has to be placed onto your tax return to reflect the income from the forgiven debt or the canceled debt. All right. The next is change in investment income. If you have increased investment income, decrease, whether it's dividends, interest, capital gains, all that affects your tax bill. So you want to make sure that you bring that up as well. All right. And the last thing is to make sure that you continue to stay informed and knowledgeable about tax changes. Continue to tune in to Sipping Wealth Live. Continue to share these lives with your friends, loved ones, so that they can wealth up with you. And I thank you for tuning in to another episode of Sipping Wealth Live tonight, y'all. Y'all have a wonderful, wonderful evening. Um, and don't forget, let's wealth up.